Good morning, everybody. Welcome to the Moving Markets Podcast. It is Thursday, August the 28th, 2025. We've got the rest of the trading day today and all day tomorrow to wrap up the month of August. And August will officially be in the books. U.S. markets have been open for just barely over a half an hour right now. And I'm going to tell you, it's been kind of a strange start. A lot of times I get on here and 30 minutes in the market, I'm trading, I say it's interesting, and that probably gets boring and cliche for me to say interesting all the time. I'm going to say it's been a little bit odd. Everything, Dow, NASDAQ, S&P, all started to the upside. And it didn't take very long, obviously less than a half an hour, for everything to turn negative. The Dow went negative pretty quickly, and I haven't paid super close attention to which Dow components specifically are dragging the Dow down. I can get a look at that in just a second here. It looks like Nvidia down 2.25% is the biggest drag on the Dow, but you've also got Verizon, Merck, United Health is down less than 1%, but it's a heavier weighted stock. So and Goldman Sachs is down a tiny bit, 0.25%, but still that's the heaviest weighted stock on the Dow. So as I look through the Dow, I see maybe just a little over half of the Dow components are in the red. The others are in the green, but Nvidia. Very moderately weighted in the Dow, because the Dow is weighted based on the price per share of the stock. And so Nvidia at $177 a share is a very moderately weighted stock. But it's it's down 2.25%, and that seems to be the biggest loser on the Dow Jones Industrial Average right now. The Dow being down 55 points, 0.12%, if you can see that on your screen, in case you don't have your TV on or have another screen going somewhere. That's not that much. That's not. I mean, that's a really, really small move. The Nasdaq is barely negative and looks like maybe it's about to turn positive again. And the S&P is only down 0.1%. So this is not a massive sell-off, but like I said, it all started to the upside and then started tailing off. All the talk this week, we've mentioned it multiple times. All the talk has been about Nvidia. Everything is Nvidia. And like some people suspected, and I was maybe overly optimistic as to what would happen. Nvidia posted really good numbers, and like I said, this wasn't a shock to a lot of people, myself included. Nvidia posted some really good numbers. They beat on the top line, they beat on the bottom line, they guided well. Everything about Nvidia's report was good, with one exception. And that one exception is what's got some people selling the stock this morning. Now, Nvidia started to the upside, and then it gradually gave up a little bit of gains. Let's look at this. I've got this one-day chart right here. You can see Nvidia actually started to the upside, dipped, went positive again by a little bit, and then had its big dip. It's coming back from it a little bit now. Now trading at 178, and the lowest it's been today is 176.41. Now, let me talk about Nvidia generally, and then I will talk about Nvidia as it relates to our trade, because our trade, I'm not ready to pull a plug on Nvidia right now, but on our trade, but our trade is in a tricky position, because whether it's up or down, and believe it or not, even with as far as Nvidia has gone down, I think it's going to come back, and I actually believe Nvidia is going to come back and close the day positive. Now, I may be wrong. I'll eat crow tomorrow morning if I am, but I think Nvidia may actually come back and close in the green today, and I'll get into that in just a second on why I believe that. So Nvidia had all of these great numbers, and they had one thing only in their report that is causing them to sell off, and that is the headline was an H2O chip, if I'm saying that right, if I'm calling it the right thing, that they had zero sales of in China. Let me see if I can find the paragraph that talks about that. Right there, it says Nvidia said it expects revenue this quarter to be 54 billion plus or minus 2%, though that number doesn't include any H2O shipments to China. Analysts were expecting revenues of 53.1 billion. So even their guidance is higher than what was expected. All of their numbers came in higher than expected. Data center revenue came up a little bit short of estimates, and then this H2O shipments to China were not what people were expecting it to be, and that's the only negative. And it seems a not good reason to sell out of Nvidia. Now, one of the challenges Nvidia has is that every broker, every hedge fund manager, every mutual fund, every independent investor that can afford it already has shares of Nvidia. That makes it a little bit tough. So you've got some people taking some profits. You've got some people maybe a little bit concerned on that weakness with the data center, although I don't know that you call those kinds of billions of dollars any sign of weakness. I've been listening to CNBC and Fox Business News since 5 o'clock this morning, my time. That's 7 o'clock on the East Coast. I have not heard one single analyst who has been interviewed and talked about Nvidia that does not plan on buying Nvidia on this little dip. And what that tells me is that even if Nvidia comes down a little bit farther, maybe they come down and test 170 again. Longer term, they're going to be going up, and I think before the end of the quarter, Nvidia is going to be setting new all-time highs. Now, let's talk very specifically about our trade, and everything I'm going to share with you applies equally to the SOS spread trade as well as the triple play trade. The only difference is the strike prices. What we cannot afford to have happen is for Nvidia to get stuck in this little range it's been in the last few days. And right now it doesn't look good. I'll be the first to admit. At 178.35, we don't have a single one of our long options on either one of those spreads. We don't have a single one of our long options in the money. And that's the worst possible place to be in a long iron condor. In a long iron condor, I know this is, and most of you know this, most everyone listening knows this, but in a long iron condor, long call here, long put here, and then here's your short option, here's your short option, there's your short call, your short put. This is where the stock cannot be. We don't care if it goes up. We don't care if it goes down. We don't care if it goes up to some astronomical level. We don't care if it drops down to forcing the company to consider bankruptcy. We really, truly don't care. We just want it to move up to or above the short call strike or down to or below that short put strike. And anything, there's the short call up there. Anything that gets stuck in between right here, in between the long call and the long put, is a 100% loss on what we paid to get into the trade. So that's the no man's land that we don't want to get into. And we need Nvidia for the respective strike prices we have. We need it to be up in the neighborhood of 185 for one of our spreads, 187.50 for the other one, or down to 172.50 or 170 on the other side. So all of this space right in here is the no man's land that we need to see it break out of. And all we've got is today and tomorrow to see that happen. So there's a couple of things that we can do, and we may not want to wait too long on this. So I was looking at the spread that has the 187.50 short call. Give me a second to change one of my settings here real quick. I don't want these numbers to fade out, or these drawings that I'm putting. I don't want them to fade out. Okay, so we have our one. I have it set so that they automatically fade out. I just changed that. 187.50, 182.50. Those are respectively our short call and our long call. On the other side, we have the 177.50. Now, this has gone in the money a little bit, but then it came back out of the money. That's our long put, and 172.50 is our short put. Okay, so here's what we're looking at. Right now, Nvidia, well off their low of the session, but still not doing great. They're at 178.81. So obviously, they're in between here. They're closer to the 177.50 side, but they're in that 178 range. So here is one of the adjustments we can make, which basically guarantees us, in a best case scenario, something in the neighborhood of a break even. In the worst case scenario, it could trap us in a loss that we may not want to be in, but the loss would be a lot less than this full loss right here. So what we have the ability to do, let me back those out and give myself a little space. What we have the ability to do today is roll the 187.50 short call. We buy to close it, sell to open down here at 180. 180 is right exactly in between our current long put and long call. Okay, we'll get a nice credit for doing that. Then we can roll the 172.50 short put right up to 180. Okay, now here's the pros and the cons of doing that. The pros are that the combined credit we get from rolling this option down and rolling this option up. Let me see, give me just 1 second. This is on another screen, but I'm going to tell you really quickly exactly what that is, because I was looking at it earlier. So right now, currently, the credit we could get for doing that would be $4 a share. I'm not sure why that erased everything I had on there. We could get $4 per share for rolling that 187.50 down to 180, rolling the 172.50 up to 180. We roll those two respectively. We're at 180, and we could get about $4 a share credit. Now, I think we paid $380, $390 to get into the trade. So we would actually end up with about, let me see what give me 1 second here. I need another second here. I got to remind myself really quickly what I spent to get into the trade. Where is my Nvidia trade? 385. Okay, I paid 385 to get into the trade. So if we've got a $4 credit, we end up with a 15-cent per share credit. Okay, 0.15 cent credit. And if Nvidia were to finish at the close of trading, if Nvidia finished at 180 tomorrow, we would actually make 15 cents on the trade. The closer Nvidia finishes to 180, the closer we come to a break even or making money. But as soon as Nvidia starts to move up above 180, as soon as they start to move down below 180, we start to lose money up to a maximum of $2.50 minus the 15 cents credit that we have net. Remember, we started out with a 385 debit. We take in a $4 credit. We end up with a 15-cent credit. So if we lost $2.50 on a bear call, if we lost $2.50 on a bull put, which would be our worst case scenario, minus the 15-cent per share credit, our maximum loss could be $2.35. Okay, that's more than 50% of what we originally paid to get in the trade, but it's a lot less than the 100% we could lose if we sit there between 182.50 and 177.50. So that is one adjustment that we could do. Now, if we were to make that adjustment today, and this is something that we probably need to decide, I'm going to tell you we need to decide in the next couple of hours, not right now. And the reason for that is I still honestly believe Nvidia might turn around. Look, they kind of, at least for this first 45 minutes or so of trading, they've gone down and hit a low. They're coming back up off it. Right now, Nvidia's only down $2.67. They've been down over $4 a share at one point. So they're kind of making their way back. if they continue to move up and they go back into positive territory and that 182.50 goes in the money, we've got to sit back and we've got to sit back and do nothing and give it a chance to build on that tomorrow. And that's a scary thing. It's a scary thing because we don't want to be in the day of option expiration and still be uncertain and just see most of our profit on this trade or most of our investment on the trade just completely melted away. I mean, we're right now, if we were to try and close Nvidia and get out of it right now, we're looking at about a 65-70% loss, which I hate to take a loss like that. So we talked about the being able to roll. If we were to make this adjustment, let me go back to the chart right here. I can illustrate it a little bit better here. If we made the adjustment to Nvidia and we rolled both options to 180 and it started to break away to the downside or it started to break away to the upside, either one, we could take the losing side of that. Okay, let's say it starts to break away to the downside and this becomes the losing side of that trade. We could take the winning side of this trade, the bear call, and we could roll that short call down a little bit more, or take the entire spread, take what would now be a 182.50 long and a 180 short. We could potentially roll both of those down. Roll that down to something like a 172.50, 180, and get some additional credit. So we could sort of take that 15 cent per share credit that we would end up with after rolling the options down, and then we could build on that and add to that a little bit. Probably not to the point of making the trade profitable, but to the point of lowering that loss. So this is one choice that we have, is to roll both short options in. I don't, this is not a technical term. This is a made up Jeffrey Dunyon term, but I call it a pincher move. We're going to move this one in. We're going to move this one in. We're going to kind of pinch our position right there at 180. That's one possible play. Okay. Another possible play is we try to make a determination today as to which side of this trade is more likely, and it's an educated guess. We did this with AMD a month ago, and it stung us for a little bit, although it's coming back now a little bit. I feel like we're kind of back on track with AMD to maybe still get profit or break even on that trade, small profit, because with AMD, the second I had any profit, I would probably get out of the trade. So we would choose what we believe is more likely to be the winning side of the trade. We roll it out for as close to a break even as we can. We don't worry too much about if we spend a little money or take in a little bit of money. We don't, obviously if we could get a good credit for it, chances are we're picking the wrong side to roll out. But we roll out one side of the trade. And that's the side, if we think the chances are it's going to be bearish over the next week or two, we roll out the call side of the trade. If we think it's more likely to be, or excuse me, I said that exactly opposite. If we think it's going to be more bearish, we roll out the put side of the trade. If we think it's going to be more bullish, we roll out the call side of the trade. And then we do that pincher move only on one side of the trade. So let's say hypothetically, now it's early in the day, and again, I'll eat crow tomorrow morning if I'm wrong. I think Nvidia is going to rally today and close to the upside. Now, I'm 55-45 on that. I'm not saying that with some kind of certainty, like I have some unique knowledge or ability to predict what it's going to do. That's my gut feel. And it's like a 55-45% gut feel. It's not something that I feel super strong about, but I'm leaning towards Nvidia having a rally before the close today and finishing slightly in bullish territory. If that actually happens, tomorrow morning, I will roll the call side out 1 or maybe 2 weeks in the hopes that over the next week to week and a half, Nvidia will in fact move up to or above 187.50. It would not take much for Nvidia to move that high. I think a lot of people are going to start buying this dip. Even if Nvidia finishes negative today, I think there's a chance they could turn bullish really, really quickly and start trading back to the upside. It's going to be a tricky one. So if I were to roll the call side out, so I've got my short call, I've got my long call. If I were to roll those out, let's say there's 1 week, there's 2 weeks, and I maybe I choose 2 weeks, maybe 1 week. I'll decide. But then I would take that 170.250 short put and roll it up to 180 and let it expire tomorrow. And this is only if the stock price has moved back above 180 and looks like it's going to continue moving up towards 180. All of this is an educated guess. I could be wrong on any of it. And then everything I just explained right there, I do just exactly the opposite. Just exactly the opposite. If it's bearish and I think it's going to continue bearish for a little while longer, then I would, of course, roll the put side out, roll the short call down to a lower strike, let that expire worthless tomorrow, and then hope I profit off the put side of it in the coming days. So it's a tough one. It's a tough one. What we cannot do is move too quickly on it. And I know we don't have a lot of time, but if we pull the trigger on one of these adjustments, like in the next 15, 20 minutes, I actually think we'll regret it. I think we'll wish we hadn't have done that, and we will wish we would have let it play out just a little bit more. I'm showing Nvidia down right now, just almost exactly $3 a share. 296, 293 down. Again, well off of its session lows of being down, I think a little over $4 at one point in time. And I'm honestly willing to give it a little bit more time today to see if it rebounds and moves into bullish territory. I kind of think it's going to. So let me conclude with this. Keep a close eye on everything. Watch Discord today if at all possible. I will send out something in Discord, and I will send out an email if I feel like the timing is right to adjust the trade. I might do it today. At the very latest, I'll make an adjustment tomorrow morning between the open of the market and the time we are online doing this presentation at 8 o'clock Pacific time, 10 Eastern time. So, all right, tomorrow, after we take care of Nvidia, because I'll comment one way or the other on Nvidia, as soon as we open up this presentation tomorrow, I'll comment one way or the other on Nvidia. Tomorrow, along with that, I will go over in detail where we're at with each one of our collar trades. I discovered late last night that a couple of adjustments that I had put together on collar trades never got sent out of our system. I'm not blaming the system. I'm blaming myself because I probably did something wrong. So to maintain some integrity, we're going to assume that for you, some of these options at the end of last week expired worthless, and I'll send out a bunch of adjustments tonight for those of you that had some options expire on Friday so that you're protected again in your positions. It's not, like I said, 100% my fault. I wasn't paying close enough attention as I was sending some stuff out, and some stuff that I put together, I realized just never went out. And I haven't I haven't successfully done the troubleshooting to figure out why, but it doesn't matter. I should have been watching it closer. So we'll get an update on all of our collar trades tomorrow morning. Look for some adjustments sent out today and tonight for tomorrow morning's open, and then we'll kind of we'll talk about where we're at with Nvidia as well tomorrow. So as we wrap up, and this was a good 25 minutes or so that I've been online, NASDAQ slightly back into positive territory, and Nvidia, oh boy, it looked like it was really moving up off its lows, and then just in the last 2 minutes, it's gone back down about 40 more cents. But I still believe I'm going to maintain. I'm still about 55.45. I think Nvidia is going to finish in positive territory today. Dow and S&P both still down, but not very much. And we'll just keep an eye on everything and see where it goes from here. Thanks, everyone. Bye-bye.